It's been a while since we've heard them, but they're back once again. Top stock picks for the week from our Roundtable members. Eric, we're going to start with you. You have a hedged European fund?
That's right. It's from Wisdomtree. The symbol's HEDJ. This ETF focuses on large cap stocks based in any part of developed Europe that use the euro. You got a lot of consumer stocks, industrials here. It's pretty well spread out profile. And what we've seen over the past couple of months is a lot of fund investors are piling into Europe, and they're kind of leaving the U.S. market. But over the past couple of months, the performance has been pretty similar for these products. But lately, in the past couple of weeks, Europe has started to outperform. And I think this trend's going to continue here in the next couple of weeks. This fund has actually been outperforming its unhedged counterpart over the past month or so. And I think this trend could definitely continue. And it could be a much lower risk play for investors who are a little worried about some of the high beta names here in the U.S. and want kind of a developed market play that doesn't really have any currency risk either.
Okay. DB, our resident man in black, you're looking at healthcare.
I am, yeah. Envision Healthcare, EVHC is the ticker. This popped up on a screen that I run just about every day. I'm out here looking for momentum, and not just momentum in the stock price, because I could see that in a chart. But momentum in earnings, momentum in their earnings revisions, over the course of the last, month or two. And this popped up there. And then when I looked at the chart, I liked it even more. So I look for stocks that have, reached a 52-week high and then had some sort of pullback to support, and then now they're starting to, come out of the rubble again. The other thing about this that I like is, given that the Russell we talked about earlier kind of sold off, this hasn't really participated to the downside as much. So that kind of strength relative to the market, I think, is pretty good. So right now it's trading right about $34 per share. The 52-week high is up there at 37. So I think you could be in for a little bit of a pop over the next few weeks.
All right, Shiraz, you're looking at machine manufacturer Manitowoc.
That's right, and thanks for pronouncing that for me. This is a multi-industry manufacturer. About 2/3 of the business is lifts. About 1/3 is on the food service side, primarily in refrigeration and that kind of stuff. The stock has done a phenomenal job this year, up almost 30% year to date. But this is not the momentum stock, the Tesla or the Netflix, that you should be overly worried about. The gain is on the back of this expectation that the primary end market demand for their core industrial business, which is from the commercial real estate side, the outlook for that is improving. And it's that improving outlook which is giving it the drive. We're starting to see that in estimates as well. And that's why it has the ZAX rank of 1 and the momentum. So even if the broader market sells off, there is enough fundamental support for MTW to sustain it, and the cycle for their core industrial product is much longer, and typically would remain in place for at least 3-4 years. Most likely starting in the second half of 2014 and then continuing for the next 2-3 years. So the company is in very good position. Earnings, cash flows should be coming through over the coming periods.
All right, thank you all for that. Don't forget, more stock picks and stock picking strategies, other interesting commentary as well. All located on our website, zax.com, and you can link to it all off the homepage, so get on over if you're not there already. In the meantime, with everyone here, I'm Terry Ruffalo.